everyone, John Henry here, slingshotfutures.com, and welcome to the daily futures and crypto market outlook for tomorrow's trading, tomorrow being the 6th of December. Overall, we've got a lot of stuff going on today, plenty of good movement across the board. The market's really starting to finally pick up a little bit. I have to say, I was a little bit nervous when we first opened the room this morning at 8 o'clock Eastern. It was pretty slow, and then we started going into around 9:30, especially around the 9:30 open. We started seeing a lot of good volatility coming in, and the index market certainly didn't disappoint. Well, maybe the S&P a little bit, but the NASDAQ was definitely a good runner. Now, before we jump on in, as always, make sure to swing on over to slingshotfutures.com, scroll down, and click on the Join the Daily Outlook newsletter. That's going to join you on our email list, so you'll be notified every time one of these videos comes out. Along with that, inside the newsletter email portion, we talk about all kinds of interesting stuff, whether there's stocks, cryptos, new ICOs, new anything, or any plan of attack on anything interesting going on. They're going to be posted in there. So make sure to sign up for that newsletter so you don't miss anything. Of course, if you haven't done so already, make sure to click on the live trade room subscription and trial info. With that, you'll be given a free 3-day pass into the live trade room so you can hang out with us for a few days and see what we're all about. You can see the trades we're looking at taking, how we analyze the markets, basically how everything works for the next couple days. So jumping into the markets here, overall, we have a lot of stuff going on, but the euro trying to take a little bit of a dive lower. Now, the thing that really stands out to me here is simply the fact that this looks like a two-legged correction down in an otherwise very sturdy bull trend. The trend has seen a lower high reversal attempt, and they're now trying to push back down. And a lot of times when you get that type of attempt, one of two things happens. The market comes back to previous major levels of structured support. We have swing high, swing high, swing high, etc. It finds that area, tries breaking underneath it, fails, and then it goes ripping back to the upside. Or the inverse situation where we come back down to those lows, the market hits the bottom area, and they break through it, they use it as resistance, and then we go a little bit further to find the next major level, and that's not going to be until around 17,190, 17,200s or so. So we have two different scenarios. Either A, we see a major failure with a big strong bull bar back up to disprove the sellers here, and that would be a signal to push back up. That's the most aggressive way. The more conservative way would be to waiting for the market to push back above that level of support, come back and buy that retest. Or we have a situation where we break aggressively down and we use this as resistance to short down to the next area of support back here, where we can then look for the bounce up from there. But either way, we're kind of in prove it territory. The euro needs to prove what they plan on doing, and until that happens, well, we're going to be sitting on hands for a little while until we gain that proof. From a long-term perspective, very likely that buyers are going to be buying into this dip, and these are the types of industrial buyers we're talking about here. They're going to be buying these new lows. They're going to buy further. If it goes further down, they'll buy more at a new low. They're going to buy all the way down, assuming that in the coming, next few months or so, they're going to be able to turn it around for a profit in the long run. But for the short term, I think it's better to wait for a little more proof. Over on gold, for the most part, gold had some pretty good movement, but it didn't really happen. It had a lot of quick snaps. It wasn't consistent movement. It was just big, fast moves, and then it died for a little while, and then another giant fast move, and then it died again. But we're still continuing this overall trend back down to a new low. Now, this area is important because this is where we found the earlier levels of support and resistance, right? These are the major lows that were put in down here, and we're back again at around 1260s or so. And as long as we're floating around here, buyers are going to be eating this alive at a new low, and anywhere below that low is going to be seen as sale pricing. Now, one thing to consider here, if we do zoom out a little bit further, this could still be that bigger move to the upside to continue that leg up. So don't go full bear yet. I think before we go full bear, what we would need to see is the market to break below this major level of support. Once we break through it, then look for a retest, and then it's full bear mode. That is, if you missed all of this. Now, the buyers are still fighting it. They're trying to defend these lows really, really aggressively, and if they hold it, we could find ourselves back up towards, 1360s by the end of December. So that's why it's very important to wait and look for confirmation, right? Do we have confirmation that the buyers are holding? You'll probably see something like this, where you can look to buy that secondary bounce. Are the buyers failing? You can probably look for something like this, where we can look to sell that retest instead. But right now, we're in a major level of support. Likely buyers are going to be buying these lows and looking for a short-term bounce. Objectives on a short-term bounce here would be right around 1273.6. Larger term objectives around 79.4, and then of course all the way back up to 87.1. On crude oil, we're still stuck in the wedge range type formation here. We're not really breaking out of this. Kind of the same scenario that we've been in for a while. They came back and tested the bottom of the wedge, the bottom edge of the wedge. We have the top of the channel kind of cutting across here as well. We're just forming a wide wedge right now, a pennant formation, or however you want to look at it. Either way, we're just kind of stuck in an overall bullish trend, and we're pulling back a little bit. The highs have gotten weaker and weaker. We had a good breakout move, right? This monster breakout move. They swooped up, pulled back, and then the next breakout got a little bit weaker. Right? And then the next breakout, we can't even break that high. So we're running into a situation where buyers are obviously not interested in the buying high scenario, looking for it further, and that means that we need to be looking to buy cheap. In cheap right now, what I'm looking for is a trap below some of these major obvious swing lows. Some of these back here, we're talking 5680s or so, it would be a beautiful trapping area to buy in at a dip and then look to push the market up afterward. Because right now, I mean, the main situation that we're running into is simply that we have a wedge bottom that's coming into play. It is holding, but the buyers, although they have a few candles, they're not really showing a good amount of proof. You're early to the party buying inside of something like this. A lot of traders are going to be waiting for that secondary bounce, and if we do get that secondary bounce, then it's all rockets are a go, and we're looking for a rally back up. But for right now, we're just kind of stuck, and I think we need to wait for either a breakdown into a trapping area at around 5680, or we need that secondary proof to buy further up, getting a slightly worse price, but it's sort of a trade-off for increased probability that the market goes back to the top. And then finally on the S&P, for the most part, did nothing. This looks to me more like a stall, a little bit of a flag in an overall bear move. We have a big bear spike down, a little bit of a flag, likely going to see a secondary attempt to the downside. That is where the probability lies, at least. There's about a 60% chance that we see a breakdown here, and we're looking at around 2621 as the target to the downside. Now, one other thing to consider here as well would be measuring up this overall swoop, right? We have this big drop lower. We can take that measurement and drive this down, and that will give us an overall projection area lower, and that lines up pretty darn close to 2621 as well. So a lot of things kind of stacking up in the same place, and of course if we zoom out and we measure the low to the high with a fib, that's right around a 50 to a 61.8% as well. So we have a lot of things stacking up in the exact same place, and buyers will likely find a lot of interest off of that 2621 if we can get a dip down there outside of this little bear flag. There's not really much else to add though, other than this just looks like a blatantly obvious bear flag. Now, you know how it goes, right? Whenever you have a really obvious signal and the market does what it's not supposed to, right? Let's say it breaks down but barely goes anywhere and starts turning back up. That is a low probability scenario, and when the market forms a low probability scenario, that means that it usually comes with aggression. It's going to take people by surprise, and that surprise is going to cause emotional trading to kick in, and that's when you start getting those big rocket ship type moves. So if we don't get a breakdown to, you know, at least 26.29 and a quarter, we might start finding some emotions run rampant, and that could shove the market right back up to new highs again if the sellers can't hold them down. We'll have to wait and see, but for right now I'm looking at this as a first leg of a bear move down into a bear flag, looking for the secondary leg down to a target of 26.21, and that is also the reversal zone to push the market back up. So that's going to do it for the futures. Now, taking a look at the news for tomorrow. Tomorrow morning at 8:15 out of the U.S., we have the ADP non-farm employment change for November, forecasted at 185,000. The previous was 235,000. At 10 o'clock out of Canada, we have the Bank of Canada interest rate decision forecasted at 1%. That is the same as previous. And at 10:30 tomorrow, of course, Wednesdays, we have crude oil inventories forecasted at a negative 3.404 million. The previous was negative 3.429. So they're looking at about the same as previous. We'll have to wait and see what they can do in a week in terms of adjusting. I remember last week was way off of what they were forecasting versus the API. Maybe we see the same thing again. The API seems to be lately becoming less accurate, so it's kind of interesting to see that little bit of a shift. But don't forget about the inventories tomorrow, along with everything else. Now, taking a look at the crypto side of things, we have Bitcoin rallying back up. Nothing has really changed from yesterday's analysis. Looking for a kick back through the highs, a kicker up to around, again, 1.5 to 1.75% through the top. And that puts an objective at around 12,120, 12,100s if you want a round number. I still think it looks good. We have an overall good continuation rally to the upside. They're not letting go of these highs. They are stalling a little bit. We are having a little bit of trouble up here, and sometimes when you run into that trouble at the highs, that will lead into a sharp pullback and then a continuation back up. And as we can see, again, since this is a copy-paste of the previous time, that initial rally up was paused for a little while with a shallow pullback before a breakout up, and that could be what we're seeing right now, is that shallow pause before that continuation to the upside, if they want to keep that mimicry going on. And it really does seem like they do. So all is well there when it comes to Bitcoin for a breakout through the highs. And if we can push above 12,000, I'll get the party hats out. It feels like just yesterday we were breaking through 10,000. Actually, that was just last week, right? So overall, just a rocket ship, waiting to see if we can get another good move up through 12,000. Over on Ethereum, continuing to hold that line in the sand, and we have now come back and retested it again. If we extend these lines out just a little bit further, we have another bounce off of that. And honestly, the analysis here hasn't changed either. We're still in the same situation where we're coming back to a major level of support. That line in the sand is still holding. They haven't been able to break down. Buyers are buying off of those lows and likely just kind of scalping their way out of it, because the moves really aren't that big. We're talking about 452 up to 463, looking at about a $10 move or so. You know, the only way that really you're going to be able to make any money with that is going to be trading huge size or margin trading futures contracts in something like BitMEX, you know, that gives you a little bit of leverage to play with. But aside from just kind of scalping it, there's not really much we can do right now until we get a little bit more information. I would still love to see a dip down below the line in the sand to prove basically that it's a failure, buy into it, assuming it's a trap low, and then shove the market right back up. And then you're looking for a longer term hold back up towards around 510. But at the moment, not really much has changed. Ethereum is still kind of in the same boat that it was yesterday. Litecoin, kind of the same situation, but we are seeing a nice little flat bottom. Notice this very sturdy shelf that's forming. They're trying to build a floor here, and that is a very nice hourly candle to try to kick the move up. This could be the start of that secondary leg up. Now, yesterday we were talking about how this does look like a really nice bullish move. I still want it to get down to 92.92, but you might not have a chance for that. Well, that's what happened yesterday. We didn't really get that chance. It never pulled back, and it did end up continuing up with a very strong bullish leg. And with that amount of bullish strength to the upside, we kind of have to pay attention to the fact that, well, usually that kind of leg comes with a secondary push, and that is very likely what we're going to see sooner than later, especially with hourly candles that look that bullish. The overall attempt is going to be back up towards the highs of around 104.81, and then get a strong breakout to the upside, 107.51 and higher, trying to break out through new highs to keep that thing going all the way up, and maybe we can hit 110 in the overnight session if they do want to break out. So overall, those are kind of the main cryptos. Now, still just kind of perusing some of the other ones since nothing has really changed. Bitcoin Cash still waiting for that dip down to 1384.49, so no change there. Bitcoin Gold has broken down underneath the channel. We are now pushing lower, so that means that we're looking for a level of support at 261.54. Notably, a couple areas of interest. We do obviously have something happening right around here at 293.59 that put in a bottom, a double bottom, a retest, a double top, a bottom, a double bottom, a triple bottom, a quad bottom, a quintuple bottom, and now we're back testing it again for the 6th time. 293.59 is obviously an area of support, and buyers will be looking to buy off of this. I would still like to see slightly better prices down to 261 if possible. You may not get that opportunity just like we saw on Litecoin. Over on Neo has hit that objective high again at 42.92, and we're pulling back a little bit, forming a weak top. This does also appear to be a little bit of a 3-push wedge high, going back to the major swing back on the 27th, 26th or so. They failed off of those highs, and now we're forming a pullback back down again. Major level of support, going to be looking for a 50% pullback, which not only is a 50% pullback, but if we look historically through price, we can see a major level of support all through here. Resistance back to support again at around 37. So a nice little bouncing area at 37. The 200 period moving average is right there. It's a 50% pullback. Everything is kind of stacking up in the same place for a potential bounce at around 37. If it does want to dip lower, though, looking for those October range levels at around 32.77, which would be the next area of support. Going on to today, EMC squared. Good old Einsteinium. I love this one. It did end up breaking out. Beautiful objective to the highs at 8,400. Did hit very nicely. Now we're breaking through the top. From the area that we were talking about it yesterday, we've gone up about 24, 25%. So a really, really nice rally to the upside from that entry area. Overall, definitely cannot complain about Einsteinium. We do still have a fork coming, and it seems like a lot of people are buying ahead of it. If you're still in it, it might be an area of interest for Einsteinium going into the fork to see what happens generally speaking, when forks hit, the markets tend to like them more than not, and they don't really pull back a whole lot. So we'll just kind of have to wait and see. You know, the references that we're using for that would be something like Bitcoin, where every time a fork came out, nothing really happened, and then it broke all-time highs again. So Einsteinium, beautiful move up. Even at the weakest point, it's about 10 to 11% ROI. Really, really good situation. Looking at XEM is the next one on the list that we're going to be looking at for the next few days. We have XEM, which is NEM coin, and that's an entry right around the area that we're in now. If we zoom out, we can see that we are holding major lows, and more importantly, we're holding a higher low. So the fact that we're forming a higher low and we're getting some good bullish continuation to the upside, we're looking for continuation back up to retest some of these earlier levels of structured support around 3,200. So from where we are right now at around 24 to 2,500s, looking for a lift up to around 3,200 and then 4,000 after that if they want to really keep going. And if they really want to go ripping, then maybe some of these other major levels just ahead of 5,000. We'll have to wait and see. But for right now, NEM coin is looking good in the short term. It's up about 3 or 4% from where we were talking about it in our members room, and now we're seeing a little more continuation from there. So longer term objective, probably over the next week or so, week and a half, 2 weeks, looking for 3,200. And then, of course, power, good old POWR. We are finding the lows of the wedge and finding a lot of bullish response here. Everything is still looking really, really good. Looking for 7,400 back to those kind of retest areas of major resistance. And if we can start breaking through there, again, general pump and dump type scenarios where we have pre-pump volume starts coming in more and more, and then when they finally launch it, it usually ends up going up anywhere between 50 to 100%. And an average area looking at these major swing highs from previous puts you right at around 53 to 54%. So there is a ton of upside potential here on power if they want to keep going. We're still not seeing the sell side let off the gas pedal. There is a lot of sell on the order books right now with very little buy on the order books, and that likely, given the fact that we're not going down, right, with all of that selling pressure, we're still not going down, seems like buyers are still scaling in for a longer term move, again, over the next week or so for that correction to the upside. But either way, we are testing the lows of the wedge, and we're getting a nice little bounce here for that possibility of movement to the upside. So everything is looking really, really good for the next coming week or so in terms of longer term moves. And that's going to do it for the outlook. So plenty of stuff to work with and all kinds of things to keep our eyes on going into tomorrow. And like we always say, it doesn't matter what market you're approaching, always, always, always make a trading plan. Trade that plan, follow your rules, and you'll be A-okay. Until next time, we'll see y'all then.